There are strong signs the Federal Reserve will hike interest rates on Wednesday. So how should Metro Atlantans deal with higher credit card rates? Joining me from Las Vegas, a de facto member of the Rat Pack, that would be our friend Ted Jenkin, the CEO of Oxygen Financial. Ted, I envy you greatly. What I wouldn't do to be in Las Vegas today as opposed to hanging out in Midtown doing very little. So back to the subject at hand here. What can consumers do right now with their credit cards?
Well, Jeff, it's hot out here today, that's for sure. But look, credit card interest rates right now, average across the country, are 18%. It's the highest we've seen them since 1996. They're up 10% versus a year ago. When I say it's only 16%. And a lot of consumers don't realize that credit cards track something called the prime rate. The prime rate is now at 5.5%, and just a year ago it was at 3.25%. This also will affect Atlantans when it comes to their home equity lines of credit. So people need to pay attention to that. But the biggest thing, Jeff, is that credit cards generally have a variable rate. You need to go back and read your contract and see how they can hike the variable rates on your credit card, because very soon, if the Fed raises rates again tomorrow, which I expect they will, you could have a credit card of 20% interest. It can get that high.
Jeez. When it comes to credit cards, get out a pair of scissors. You don't need them, man. That is, I mean, there's nothing more shackling in modern life than a credit card. How about consumers? How can they fight rising interest rates, Ted?
Well, look, if you're in serious trouble with your credit cards now, or you have large balances and you're struggling, the easiest thing to do is to call your credit card company and see if you can do something called a workout agreement. And this means really renegotiating the terms of your credit card contract and saying, can we go to a fixed rate, or can you lower the interest rate for a period of time? For some people, Jeff, and I don't like this for everybody, you might actually take out a home equity line of credit. Oh. If you do this, you need to make sure that you do plastic surgery and cut up those credit cards. Don't cancel them, but cut them up, because you don't want to put debt back on the cards. But a home equity line of credit, if you qualify, it could be about 10% cheaper than the interest rate on your credit card. And if you also have decent credit, you may be able to do a credit card balance transfer to a zero interest rate, like an introductory card that gives you a 0% interest rate, and that might help you alleviate the pain for 12 to 18 months. All of those are good options for people that might have credit card debt right now.
Ted, for those watching right now that don't understand why interest rates are going up and credit card debt as well, can you give a quick tutorial on that?
I mean, here's the simple news. With inflation that came out last week at 8.3%, the major tool in the Fed's toolbox to keep inflation in check, which a lot of people want, is to raise interest rates. So we're going to continue to see that happen, Jeff. And I feel for people that have credit cards, because if you have $5,000 of credit card debt right now, it could take you at an 18% interest rate 16 years to pay off that debt if you're only paying the minimum payments. But as long as inflation stays high, Jeff, the Fed will continue to raise interest rates.
Economy right now, yuck. Do you expect rates to continue to rise higher if the economy doesn't get on track?
Yeah, I think inflation is that big number. It won't surprise me at all if the Fed does a 0.75% interest raise tomorrow. It could be as high as 1 full percent, because look, with the economy right now, if people continue to have double-digit prices in terms of growth at places like the grocery store, it's hard for families that are living on minimum wage or lower incomes to just survive, Jeff. So the Fed needs to raise these interest rates to try to get inflation in check.
I don't know how families do it. A lot of families in such dire straits right now with inflation. One final question as we go into a different direction. We saw the funeral of Queen Elizabeth II on Monday. There is some chatter on what will happen to her inheritance. It is an interesting question. What do you think about all that?
Well, people shouldn't confuse the Crown estate, which is reported to be $28 billion to $34 billion. That's all going to pass to King Charles III. Major properties like Buckingham Palace. But the Queen had a personal net worth. It was reported about $500 million to $1 billion. I don't know if we're ever going to know, Jeff, exactly what's going to happen to it, because her will is going to be sealed. But I suspect that most of the money will go to her 4 kids and her 8 grandchildren. That's probably where it'll end up. But she doesn't pay any inheritance tax, Jeff, so it's all going to end up going to the kids and the grandkids. That would be my guess.
A man like you in Las Vegas, as smart, as wise as you are about money, are you able to have fun knowing that all of the advantage is with the house chips?
I can still have fun out here by seeing shows and dining out well. And if I play any kind of games, Jeff, I play craps. It's the best odds in the casino.
Waitress, I'll have another crown, please. Ted Jenkin, the CEO of Oxygen Financial, thank you very much.
All right. Thanks, Jeff.